Now, let's look at another awesome opportunity here on the Aussie Canada. We spoke about patterns earlier and how they tend to form in periods of consolidation. Well, if you were to look up the word consolidation in the dictionary, if people use dictionaries anymore, I don't know if they do because we have internet and stuff. But if you were to have a dictionary and if you were to look up the word consolidation, you would find a picture of Aussie Canada in there because that is all this pair does, which makes it a really dirty and disgusting pair similar to the euro pound. Ugh. But if you're a pattern trader, it also means a lot of freaking opportunity. So I really enjoy this pair, and that's what we have today. We have a potential deep Gartley pattern forming here on the hourly. I'm going to stretch my chart up because this thing is kind of tiny, but I'm going to shortcut it for you real quick just to save time because I feel like we've gone like 20 minutes already in this vid. But here's what we're looking for with the Gartley pattern, right? The other pattern we looked at in the past was the bat pattern. This is very similar. It's still an M and W shaped pattern, just a different rule for the decompletion. But what we're looking at is still our swing low to swing high, X to A. That's our starting point, our initial impulse leg or anchor leg. Our retracement back here is going to be our A to B. If it hits the 786, it is invalid. This one is at 74.9. There's no close enough, or if there is a close enough, have a strict rule for what that means. But for me, there is no close enough. It either hits or it doesn't, black or white rules. We then come back to a nice retracement right here. And then we're looking for this 127 Fibonacci extension, right? I took that from the A leg up here to the B leg down here. And that is going to be our projected decompletion, that zone right here. So it's a really, really deep Gartley pattern, which is awesome because it's going to give us a very good risk reward. And the risk reward isn't always great with these advanced pattern formations, especially the Gartley pattern. So when we can get one that completes really deep in the zone, it's going to be a good one. I'll give you an idea of what the risk reward actually looks like here. Fibonacci retracement, swing high to projected swing low. Let's just use a 113 to project our stop loss. And I'm pretty sure we're gonna get like a 2-to-1 on here, probably more than that. But entry right at the decompletion, bang. No, wrong way. Long opportunity to kill, there we go. Entry at the decompletion right here, bang. Target at the 3-2. Stop loss at the 113. Ooh, baby, 2-to-1. Look at that. Now, what if I told you you can look for an even better risk reward on this as well? And this is an interesting one. It falls in line with a conversation we've had on the Trading Coach podcast a few weeks ago, where I spoke about a fake trading strategy that lost a lot of traders a lot of money and made me feel bad about myself, even though it wasn't my fault. But there were ways to do it. That is the aggressive C, right? So let's hold this risk reward right here. And I'm gonna measure something else out for you, right? I'm gonna bloop and get rid of this stuff so we get a cleaner chart here. And I hope I don't delete anything that is relevant. There we go. If I start looking up here and I measure this move out, you're gonna see that this is actually the starting point for another potential advanced pattern formation. It's going to look like this: swing high to swing low, X to A to B, B to C would be down here if we go that far, and then a CD completion up at the 886. So if you were to trade this Gartley pattern, this would also be a legitimate excuse of aggressively getting in the C leg of a bigger potential bat pattern. Now, should you do it? Probably not. I think I would not do it, just full disclosure. But we were having conversations about if you are going to do something, do it the smart way, and this would be the smart way to do it, because you're not entering this C leg simply because it's the C leg of a potential pattern, which makes absolutely no sense. But you're entering it for its own legitimate reason. It happens to be the decompletion of a Gartley pattern that just happens to be at the C leg of a bigger potential pattern. If you were going to do it, my advice would be this, right? And of course, I don't give investment advice, disclaimer stuff, right? But I would take your initial targets, how they normally were, based off of the Gartley pattern, which are right around here. And then whenever you want to get risky, right, I would do that with your secondary target. So if you have a target 2, that's when I would look to get that target 2 and shoot for the home run, right? There are spots in between I would shoot for, like right here at a retested structure is 90 even, or 89, 68, and then target 2 being at the 90 even right here. But to each is own. Now, one of the reasons I'm not too sold on the aggressive C is that I also think we can go lower here on Aussie Canada, right? Next up is going to be the pound.